a group of like-minded people or people having a common goal, they come together to form an association, they have to get it registered in some form. It has to have a legal structure. Now, what are examples of such associations? For example, if people come together to promote art and culture, to promote music, sports, healthcare, we have Delhi Gymkhana Club, then Soho House in Mumbai, we have Quorum Club. Now there are a lot of temple trust also, they also have a legal structure to it. All these associations have some funds with them and they have to deploy it for the best interest of members who are associated with the association. Now where do they deploy these funds? Where do they invest? Can they invest beyond fixed deposits or not? We have observed that usually these associations invest in fixed deposits, but there are other avenues available. I have with me Pritika Kumar. She is co-founder at No Grey. It's a will-making platform. It's a Gurgaon-based will-making platform company. Welcome, Pritika.
Thank you, Aparajita.
Yes, glad to have you here, Pritika, and I really hope that we can simplify this topic. It's a very important topic and less discussed.
Yeah.
So let's just get
I will
straight
try
to
my
it.
best. Yeah.
So first of all, let's discuss legal structures that these associations can have. What are some types of structures?
Yeah. So typically when people come together, they come together for a purpose.
Right.
And depending on the purpose, the structure of the organization needs to be decided. Is your purpose purely profit oriented, or is your purpose more like charity driven, public service driven?
Right.
So if you are a group of people who are driven by profit motives, then you would go for some of the profit structures that are available, like a company or an LLP. But if you are a group of people who's interested in impact, it's more purpose driven, more community driven, then you would go for either a society or you would establish a public charitable trust, or you would establish a Section 8 company, which is a non-profit company. So these are some of the structures that are available for more public driven causes.
Yeah, so let's stick to public driven causes.
Yeah,
and I believe for that we have three structures.
That's
either
right.
societies or Section 8 company or trusts.
That's right, a public charitable
Public
trust.
charitable
because
trust.
there are two kinds of trusts that you can
Correct.
form. One is a public charitable trust, the other is a private trust.
Okay.
Typically a private trust would be, you would see these funds run on the basis of a private trust document.
Yes, family offices.
Family offices. A living trust is basically made under the Private Trust Act.
Right, families will have their for succession planning.
Correct, for
People
succession
create-
planning, absolutely. That's where we use like the Private Trust Act to create a private trust.
Alright.
Whereas if you are a non-profit organization, Indian or global, and you want to set up non-profit, operations in India, then you would go and establish a public charitable trust.
Okay, all right. So let's talk about public charitable trust first.
Sure.
So what happens in that case?
In India, Aparajita, we don't have a central public charitable trust act. A few of our states have state-specific legislations, and the most commonly used one is the Maharashtra Trust Act.
Right.
And we also have one in Orissa, and we also have one in Bihar and Madhya Pradesh.
Okay.
And typically the formation of trusts in these jurisdictions is regulated by these acts.
Okay,
But
specific state acts.
Specific state acts. But then if you are operating purely out of Delhi, or out of a state, say Jammu and Kashmir or Tamil Nadu, in that case your Maharashtra Act will not apply and the Orissa Act will not apply. But your trust deed, then you can draft however you want to draft it, and then it will be more purpose driven.
All right. So in those states, trust deed has to follow any broader law?
So
or
the
it's
broader
all-
law that one, like as someone who's drafting a public charitable trust, one will lean on and take inspiration from the Maharashtra Act and also the trust deed. Like the Private Trust Act,
Right,
the Indian Trust Act.
1882,
So,
I think.
and then you will also look at some other examples that are available, and you will bring it together, keeping in mind the purpose of the organization coming together.
All right. So let's talk about Maharashtra Public Charitable Trust
Yeah.
Act. This is how it is called, the technical term?
Maharashtra, Maharashtra Public Charitable Trust Act.
All right. So in that, what are some investment avenues allowed?
So what that act really says is that if you have funds which are not being immediately used towards your purpose, you as a trust have to mandatorily put that money into, say, a scheduled bank.
Okay.
And otherwise you can also invest in certain specified securities, but the securities that have been defined under the act are mostly government securities.
Okay.
And if you want to invest in any other kind of securities, then you have to go to the charity commissioner and take permission from the charity commissioner.
Okay, so in case of Maharashtra, so for example, any public trust is formed, then in their trust deed, either they will have to specifically mention that these are government securities or these are some
No, they don't have to
where
mention anything. So the act says that notwithstanding anything contained in the trust deed.
Okay.
So you have to invest that money if it is sitting, if it is not in use and is not going to be in use for a long time. So if your purpose is such that doesn't need that money immediately, the idea really is to not let that money just sit and to allow for that money to grow.
Okay, so either they can do it with corporate, either they can do it
deposit it. So you make a deposit in a scheduled
banks.
bank or make a deposit in a recognized cooperative bank. There are certain kind of banks that have been defined in the act.
Okay.
So you are required to make a deposit in those banks, and you can invest in certain kind of public securities. Those public securities are defined in the act, but those the ones that are defined are very limited. So there are like government securities that you can invest in, and if you want to invest in any other kind of security, if as trustees you feel that you know there could be better use of the money that you have and it can grow, and when it grows you can make better use of it by applying it towards the purpose, then you can go to the charity commissioner and you can seek permission from the charity commissioner.
So can they invest in mutual funds or listed companies?
So there is no restriction on it. But they will have to go to the charity commissioner and seek permission from the charity commissioner.
And I believe there are some approved mutual fund schemes where Maharashtra charitable trusts can
there have been people who have been talking about it. They may have access to some internal documents, but in my experience I haven't yet come across a notification that's been issued by the charity commissioner which pre-approves you know, investments in some kind of mutual funds. But I don't see the problem because there's an enabling provision in the act. All that one needs to do is one just needs to approach the charity commissioner.
Yeah, and that is where I believe the problem comes. Either people are not aware that they can very well do it.
Yeah.
Approaching charity commissioner and getting approval for investments in different kinds of products, or charity commissioner, are they welcoming, are they forthcoming when it comes to it, or is just that people are unaware and they haven't even approached?
Well, I would say it's a mix of all of these things, you know, and I would like to believe that the charity commissioners would be open to such submissions. However, of course, they will look into the feasibility aspect, the safety aspect of keeping that money safe. And if one is to make a strong case for making a particular investment, and if it is aligned with the purpose of the trust and will help the larger beneficiaries, then I don't see any reason for the charity commissioner to refuse it. And have people been doing it? Not in my awareness. I haven't seen this practice. Why have people not done it? I think what happens is that we all get so used to how things are being practiced that we never really go and explore these options. You know, we are all victims of practices, sometimes old and sometimes new. So I think this is definitely worth exploring and visiting.
The idea is that these funds can very well be deployed in mutual funds, be it debt or equities. Just that you have to go out and explore, and you may have to get approval from charity commissioner. This is it. You will
have to get the approval from in Maharashtra.
In Maharashtra.
What's interesting is that the other states don't have a public charitable
so Tamil
trust
Nadu
act.
You mentioned, Delhi you mentioned.
So the inference of that would really be, you know, that actually you can invest.
Exactly.
But that will have to be aligned with the purpose, and there again the trustees may sort of worry about making these investments because they have duties as trustees.
Right.
You know, and if some wrong investment is made, then it could somehow come upon them personally.
But I believe fixed deposits, because in the as we have seen in our families also, that our parents, they would keep money in fixed deposits.
Correct.
That is how things have been. But we
Correct.
have observed change in last few years, and people have started investing in mutual funds or in stock market. So
Correct.
similarly, in this case, I feel it's just lack of awareness, because in fixed deposits, you get some that interest income is coming every year.
Yeah.
And in case of public trust, they have to spend 85% of their income in a year. So I was
Right.
speaking to someone, and this is what he explained, that 85% income has to be spent. But if you keep that amount in mutual funds, then those are unrealized gains. You are getting that interest every year, but you haven't booked it.
Yeah.
If you haven't booked it, then you don't have to spend it. 85% rule will not apply there,
Yeah.
and your money will grow. So
Yeah.
if you have that kind of money with you, which you are not going to use in immediate future,
Correct.
then why not? Why not are you investing in debt mutual fund? Makes more sense from returns point of view, from
Yes,
taxation point
yes.
of view. So this is it.
Definitely something worth exploring
Yeah.
and increasing your corpus for better use.
Correct.
Having said that, one will have to carefully consider the terms and
Purpose,
conditions of each of these securities that one explores an investment in. And that is something that the trustees will have to be careful about and mindful about.
Correct. And in case of private trusts, you mentioned that they have lot of avenues there, and it's the profit. There
So
could
there
very
are
well be
again
motive, so-
specified securities for a private trust under the Indian Trust Act, and there is a long list that's been notified by the government. So a private trust can actually invest in listed or to be listed securities.
Also, right.
There are some more conditions. It's worth looking at that notification when finally someone
Yeah.
decides to make that investment.
Right.
One can invest in government securities, in infrastructure,
Bonds,
debt
हाँ.
instruments, also
Index
shares
funds,
of a company that's listed
Right.
with a certain kind of market capitalization. So,
Right.
yeah.
What happens in case of societies? So you only told me that temple trusts, sometimes they get registered as societies.
Correct.
They don't always get registered as charitable trusts. They could very well have a legal structure of a society.
Correct.
So when it comes to societies, where can they invest?
So then again, for societies, in my opinion, what applies to a trust would also extend to a society.
Okay.
So what a private trust can do, the securities that a private trust can invest in, even a society can invest in.
Right. So that's section 20 of
That
Indian
section
Trust.
20 will extend. Yeah.
All right. And here I would like to highlight that there is this 2017 gadget notification, government notification, where they have listed very clearly, or you mentioned infrastructure bonds and index funds and listed
Mutual
companies.
funds,
It's
certain
there.
kinds, yeah. It's all
Yeah.
there.
And so if you need that document, I have with me. Just comment in the video below, and I can share it with you. I'll share my email ID also. So open to share those documents with you guys. And now we have discussed societies. Now coming to section 8 companies.
Yeah.
What happens in those cases?
So even there is no restriction on a Section 8 company in terms of the investments that it can make actually. In my reading actually, there, like, even your societies and trusts are slightly differently regulated than a Section 8 company. So a Section 8 company, to my mind, as long as the investment is aligned with its purpose, a Section 8 company can invest in any kind of security that it wants to, provided
Alright,
the company can justify that investment. Again, the principles that extend to a trust and a society in terms of deciding on these investments will also, by inference, extend to a Section 8 company.
Yeah, so the crux is that there is no restriction.
There
That's
is
what
no-
we again and again we are trying to highlight,
yeah.
that you can very well go and invest in better products. You
Yeah.
don't have to stick to fixed deposits.
You don't have to explore
Correct.
it.
We
Yeah.
have to explore those options.
Yeah.
Now sometimes trust deeds restrict you to invest. Model bylaws will be there in case of societies.
Yeah.
Then they may specifically mention that you cannot do that.
Yeah.
So please share with us, can those be
So in the
amended
case
or
of in the case of a public charitable trust, if you're in Maharashtra and there is a restriction on investment, then the Maharashtra Act will supersede if you do a literal interpretation of the clause.
Okay.
As far as a private trust deed is concerned, the investment decisions will be dictated by what's written in the private trust deed. Can you amend a private trust deed? Yes, you can amend it. You will have to follow the procedure laid down in the private trust deed for an amendment. Now, if the private trust deed is silent on it, is not talking about an amendment, in that case, by inference, in my opinion, you can go to the court or you can get a consent from all the beneficiaries.
All right. Okay.
Whereas in Maharashtra, if you're a public charitable trust, then you can, if it's like a small minor change, you can go to, you need to report these changes to a charity commissioner. Certain, if it's an administrative duty that's been given to a trustee, then the trustee can act according to the deed and make changes, etc. But if it's a core change to say the purpose of the trust, then naturally you'll have to go to the courts and seek permission for that change.
Okay, and same happens in the case of societies also?
Yes, that's right.
Because I specifically want to talk about housing societies and resident welfare associations that we have in apartments.
Yeah.
So committee members, they are flat owners, they create an association and then every year every month we pay maintenance fee, and that is how they collect their funds.
Yeah.
So talking about them, those funds can also be put to better use, right?
Absolutely.
And if model bylaws don't allow you doing that,
but that will need some proactive action from the societies and the
that usually doesn't happen.
Well, you're creating the awareness, and that's how it begins.
Correct. Truly rightly said. Okay, and now talking about these charitable trust hiring advisors, financial advisors. So usually committee members will have president, treasurer, there will be some maybe joint secretary, 4 or 5 posts, and all are pro bono posts, and usually people will have their primary job, day job, and that will be a side affair, taking care of that charitable trust. Could be or could not be, but they may not be investment professionals. So would you advise hiring professionals, and then in these cases
fee based wealth managers would be a good idea.
But in these cases, they usually, I feel that they may, do they pay salaries? Can they hire people?
Well, depends on how your trust is structured or how the society is structured. Your schools also are run under societies, and it really depends on the bylaws, and the teachers are paid, etc.
Okay, schools can also have societies structure.
That's right.
Okay,
that's right. So, there are certain trusts that I have worked with. The trusts pay out salaries to consultants, to professionals, and I see no reason why a fee structure cannot be worked out for a wealth manager. Traditionally, you're right, in a housing society, etc., it's usually the residents that are coming to play out their duties, and they are not really compensated for it, which again is, to my mind, it's like a disincentive. I think like there is not enough reason for them to like actually
put
work
in that
towards
effort, the time investment.
You have to incentivize these roles to actually get the best results. So to my mind, the whole practice of not incentivizing these roles needs to change when we are talking about public charitable.
But some people highlight that if you already have a day job, and then you cannot draw 2 salaries. So that is where challenge
comes. Well, there is no such restriction now. We are talking about this whole moonlighting. The world has changed. There are like people I know, they're doing like 3-4 jobs, and you can be laid off if you're just on one job. So now the world,
you have to have second plan.
You need to have like a couple of them if your organization allows it, and if you're being transparent with them. And then only there is no reason why these roles should not be incentivized.
Correct. And if this is the challenge, then very well hire an investment professional.
Absolutely.
Fee only investment professional, and you just have to pay some annual fixed fee to them, and they'll do it for you, happily do it for you. I know a lot of RIAs who have tried to get into it, but again, the change of mindset needed from committee members, that doesn't happen. So would you like to share some experience of the governance structure?
I would not like to go into like any specific examples, but what I have noticed in my practice as a lawyer, while reviewing trust deeds, be it for private trusts or be it for public charitable trusts. Now, what is a trust deed? It's really a governance structure. And what I've noticed is that in practice, many a times the documents that are being used are not very clear. They're not really defining all the roles and responsibilities of all the characters in the story of that trust very clearly. So I feel that leads to, in many cases, sometimes mismanagement, and sometimes just there is a lack of proactive approach. And
Right.
so I feel if the trust deeds are more clearly drafted, where thinking has been done in different layers, the duties are laid down, there is no cross reference of other policies and other bylaws which will never get drafted. Actually do it while you're drafting the trust deed, finish it
Right.
there, don't procrastinate about it, make a tight framework
Right.
and keep revisiting it whenever you need to.
Correct, huh.
I feel that will lead to better governance. And yes, there is like a governance problem, not just in these kind of organizations, but organizations across our country.
True.
And the
Yeah.
problem is the same. The governance structure, which is a framework, documents are not very clear, and they are
Correct,
not
huh.
regularly revised and
So
reviewed.
have you observing change in this space? Are there trusts who are trying to proactively approach
Of course,
advisors
there's
or
change. You're talking about it in the product that we are building. In fact, we've built like a trust management system where we have actually deployed all of these ideas that we are discussing. We are creating like tighter trust management structures.
right?
It's bound to happen,
True. Any last word for people watching this video and who are associated with these kind of trusts or clubs?
I feel that everyone should explore whatever avenues are available, and one should try to push the boundaries always. And let's just create
Trying to
more value
innovate,
wherever we can. However, don't make risky investments. Read through the documents thoroughly, ask the right questions, and where you need to take a chance, and where you
Right.
need to take approvals, take the approvals.
True. So what I feel is that if you have a large amount pool of funds with you, then you can define that this is for short-term goals and this amount is meant for long-term goals, and that long-term money can very well be put in
Yeah.
instruments getting higher yield
Yeah.
compared to short-term, could very well be in FDs also.
Yeah.
That is how the way we approach our own personal investments, that is the way to go about for these trusts and clubs also.
Absolutely. It's in fact your duty to do it.
Exactly.
Yeah.
It's not that if you are investing in a profitable instrument, doesn't mean that your purpose is not aligned with the profits that you are earning. It's not the case. The very motive of you being committee member is that you get that value. You have to unlock value of funds that are there with you.
Absolutely.
So that's important.
Absolutely.
On that note, let's wrap up this session.
Thank you,
And really
Aparajita.
glad to have you here, and we
Pleasure
had
to
great
be here. It
discussion.
was a great chat. Yeah.
Yeah. Right. Okay. Thank you.